Hi, I'm Brien Lundin, editor of Gold Newsletter, and I'm here at the Vancouver Metals Investor Forum. I have the great pleasure of talking with one of the companies, one of the management team from one of the companies in my Gold Newsletter portfolio that I'm very excited about, Kenorland Minerals. Zach Flood is going to tell us all about it. But Zach, one of the keys that I was talking to the crowd here about is, in the junior mining game, is management. That's the key. It is widely believed, and I share that belief, that Kenorland, with you and your management team, is the preeminent prospect developer in the industry. As our audience probably knows, the prospect developer business model means that you're getting other companies to spend the big money to do the big lift, the expensive lift to develop projects, and you retain an interest and you don't dilute your shareholders thereby. You've done what many would think would be impossible. I mean, you're making money in that model. You have gotten a lot of money put into the ground. I'll let you quote the numbers for the audience. With zero dilution or very little dilution to the shareholders, and you have so many lottery tickets that are paying off literally as we speak and look ready to pay off. Just really the best prospect generator that I've seen with that model. So all of that said, tell us, let's start with how much money you've been able to put in the ground in the financials, the financial powerhouse that really is Kenorland.
Yeah, and Kenorland's really focused on greenfields exploration, so the amount of money, I think, means that much more that we're spending this on early stage exploration. This isn't like we're pouring money into advanced stage drilling.
Yeah.
This is covering huge areas of ground across North America with early stage exploration, big geochemical surveys, geophysical surveys, et cetera. So yeah, since 2016, when we founded the company to the end of last year, we've operated about $130 million worth of exploration on the portfolio, and close to 100 million of that has been from third parties. So really leveraging the project generation model. Again, like if a junior went out there, tried doing early stage exploration, and sole funded $130 million, you can imagine how many shares they would have outstanding. Yeah, so it's a high risk game when you're focused on early stage. The odds are obviously against you to make mineral discoveries, so it does require a lot of shots on net, a lot of irons in the fire. But we do have that track record as well. We made a genuine large scale high grade gold discovery in northern Quebec with, at the time, our joint venture partner Sumitomo Metal Mining. So I think the exploration strategy is just as important. It's a proven strategy, and we're just scaling up and kind of repeating that process.
You, on that discovery, you've reverted to a royalty position on that. Do you have any more obligations, exploration cost obligations for that project at all? Or
no, the beauty of the royalty is Sumitomo carries 100% of the spend going forward, including any potential future development of the mine. So we have huge exposure to the economics in the event that it does go into production. A 4% net smelter return royalty doesn't account for profit margins even. It's just 4% of the total value of gold that comes out of the ground. So we have
immensely valuable.
And a lot of leverage to gold price as well. Obviously, the royalty space is extremely competitive, and assets like these are very rare. So I think that's a reason probably you saw the shift in the share price once we announced that deal. We climbed about 100% last year and still have ways to go, I'm sure.
Yeah, because there's a lot more to come on that project alone. I mean, Sumitomo's driving a decline that shows, obviously, you don't have a resource yet. That's coming out. A lot of drilling, a lot of great results in the project as well.
Well, they haven't made a decision yet on the decline. We're heading in the direction of that decision. There's still, a number of milestones ahead of that, including a maiden resource, a permitting decision on the decline, and then ultimately, it's up to them whether or not they'll invest the capital to put that in. But that is a huge,
indication.
The fact that they're thinking, and we're permitting for that and doing the engineering work in preparation for that. But that decision hasn't been made. But once it is made, if it's a positive decision, that unlocks an incredible amount of value for that royalty.
Yeah, and there's a lot of drilling. How much drilling on that project so far?
It's about 230 drill holes, about 110,000 meters of drilling to date. We're currently operating, as of today, I got the first drill report, a 23,000 meter program
Wow.
right now. So that's all, a lot of that's infill and some modest step outs in preparation for that maiden resource, which again could be towards the end of this year, potentially next year. It's a little bit out of our control as it's
Right.
Sumitomo, but the goal is to create a resource within the next year or two.
Yeah, and to my eye, looking at that, I think that's a project that's going to be developed at some point. It is that much drilling, those kinds of grades, those kinds of results. It's really pointing in that direction, and that's just one. Let's talk about the span of projects that you have all across North America, the scope of the projects in your portfolio.
Yeah, most of our exploration these days is focused on gold in Eastern Canada. So our specialty is exploring undercover. Glacial till is kind of extensive across the Canadian Shield where a lot of the gold deposits are. So that masks a lot of the bedrock. So we feel like we have the best odds of finding high-grade vein systems in these Precambrian greenstone belts is mostly where they occur. So our strategy has really been focused there. We do have exposure to nickel exploration in the Thompson Nickel Belt in Manitoba, as well as a porphyry copper play up in eastern Alaska. Those things are all being advanced this year as well. But yeah, I'd say, what we're really good at is gold exploration, large-scale geochemical surveys. We screened about 350,000 hectares last year in northwestern Ontario on a few properties that we had just recently staked. And already, I think at the end of last year, we announced the results from that. And there's a couple big gold targets that we're going to be following up on. A project of that scale will likely attract another partner to continue funding as per our business model. And then we have a huge amount of ground up in northern Quebec that we staked within the last year as well that we haven't touched yet. And we will be sampling that for the first time as well. And, when you talk about soil sampling surveys, it's hard to get excited. But when you're sampling 300,000 hectares of ground over 100 kilometers of strike, you never know what you're going to find.
You never know, but you're staking and grabbing this ground for sound geological reasons, and you have a track record of discovery so far.
Yep.
You also have the resources, financial resources, to do what you need to do, and where most companies cannot have an idea and go get what they need to explore that idea. Let's talk about your balance sheet a bit. You have cash, resources, et cetera.
Yeah, we got $25 million of working capital. Our budgets this year are, I think, the largest they've been in the last few years. So there's around $36 million being spent on the portfolio, and around $6 million of that's being sole funded. So 30 of that's coming from third parties. So 25 million in the bank, 6 million being spent. That would draw us down to about $19 million by the end of this year. Of course, you could say, what about G&A? Well, yeah, we got a big team, big G&A, but through operating all this exploration, we're generating revenue, as you mentioned earlier on. So there's around $4 million coming into the company through our management fees, cash payments through some of these farm outs, and some refundable tax credits as well in Quebec. So we've got strong revenue coming in that covers our overheads. So really our only drawdown on the treasury is what we're sole funding.
Yeah, that's an aspect that I think we so often miss when we analyze a company. We look at a company that's got a discovery, and we don't adequately look at what it's going to take to develop that discovery and the amount of dilution that a junior mining company has to undergo to raise the money, and sometimes in lousy markets to develop a discovery, and it really hampers, if not prevents, them from actually realizing any kind of accretive value for doing that. You don't have that with Kenorland because you don't have that share dilution. You have money coming in covering your G&A. And I think it's also important to say it's not just potential. You have sound discoveries, exciting discoveries already there that are being developed. Zach, it's So great to have Kenorland in my portfolio. I'm very excited for the future. If you're looking for a catalyst, you can't ask for more than that. So a lot of money going into the ground. Thank you so much.
Thank you very much, Brian. Appreciate it.